Hey everyone, welcome back to Corporate Decoder, the place where we make your corporate filings less confusing and more juicy. Today we're diving into Seritage Growth Properties' latest filing, and let's just say it involves some preferred shares a lot closer than you might think. Ever wonder what's really going on behind the scenes when a company reports its results? This filing gives us a peek, especially at how they are handling their finances and what they are telling the world about their performance. Seritage Growth Properties, you might know them as SRG on the stock market, is a real estate investment trust. They focus on properties, and this report is about their latest financial updates. What's particularly interesting here is the mention of their preferred shares. Think of these as a special type of stock that usually pays a fixed dividend, kind of like borrowing money but with equity. They have these 7.00% series of cumulative redeemable preferred shares. Cumulative means if they miss a dividend payment, they have to make it up later. Redeemable means the company can buy them back. This is important because it shows how they are managing their debt and equity structure, which directly impacts how much money is left over for the regular shareholders. This document we're looking at is called an 8K. It's a report that companies have to file with the US Securities and Exchange Commission, or SEC, whenever something important happens that shareholders should know about. It's not a regular update like a quarterly report, but rather for specific events. In this case, it looks like they are primarily using this 8K to report on their financial results and a press release that came out on the 14th of November 2025. So the main story here revolves around their financial results for the 3 and 9 months that ended on the 30th of September 2025. This is where the rubber meets the road for investors. When a company releases its earnings, it is like a report card on how well it's running its business. They are essentially telling us how much money they made, how much they spent, and what their financial health looks like right now. The details of these results are in a press release they issued. While the actual press release isn't embedded here for us to dig into the nitty-gritty numbers, the fact that they are formally filing this press release as part of their public disclosure is a key event. Think of it as them putting their official stamp on the information they are sharing with the public. Companies often use these press releases to frame their results in the best possible light, so it's always wise to look past the headlines and understand the underlying numbers when you get a chance. Now, we do not have the detailed financial tables in this particular document to break down revenue, expenses, or profits. However, what this filing does highlight is the critical date of the 14th of November 2025 and the confirmation that their financial results for the period ending the 30th of September 2025 are now public information. This is the snapshot of their performance for the first 9 months of the year, leading up to their final quarter. For investors, this is critical information to gauge short-term success and to predict future performance. Let's think about what this all means for Seritage Growth Properties. As a real estate investment trust, their performance is tied to the strength of their property portfolio, how well they manage their leases, and the overall economic environment. When they release results, we are looking for signs of growth, stability, or potential trouble. Are their properties attracting tenants? Are rents increasing? Are their operating costs under control? These are the big questions. This filing, by referencing the press release, is essentially signaling that the answers to those questions are now out there for everyone to see. The mention of preferred shares, specifically the 7.00% series of cumulative redeemable preferred shares, is also a signal. It suggests that the company may have a significant amount of preferred equity on its books. This fixed cost of capital, the 7% dividend on those shares, is a priority payment before any earnings can go to common shareholders. If the company's income is fluctuating, ensuring these preferred dividends are met is paramount to maintaining stability and investor confidence. The redeemable nature also means they have the option to buy these back, perhaps if they want to simplify their capital structure or reduce fixed dividend payments, but that would likely require significant cash flow or refinancing. So, while we do not have the juicy numbers from the press release directly in front of us in this filing, this 8 serves as the official notification that those numbers are now available. It's the signal flare that tells the market, here is our latest performance update, pay attention. For investors, this is cue to go find that press release, dig into the details, and see what Seritage Growth Properties is telling us about its current health and its future direction. It's always about looking beyond the basic report and understanding the story the numbers are trying to tell. My take on this is pretty straightforward. This 8K is less about revealing new dramatic information and more about the official confirmation and archiving of previously announced financial results. The real analysis will come from digging into that press release referenced here. However, from what we can see, the company is communicating its financial standing for a significant portion of its fiscal year. The preferred shares are a key part of their financial jigsaw, and their management and potential redemption are always areas worth watching for any REIT. What's notable here is the timing. Reporting these results on the 14th of November 2025 gives investors a look at their performance leading up to the end of the year. We need to see if their strategies are paying off in terms of occupancy, rental income, and overall profitability. There are always risks for real estate companies. From interest rate changes affecting borrowing costs to shifts in tenant demand, this filing is a stepping stone in understanding how Seritage is navigating those challenges. Ultimately, Seritage Growth Properties, like many companies, is presenting its financial narrative. The key takeaway from this filing is that their performance update is out, and it's now incumbent upon interested parties to examine the details, understand the context of their preferred stock structure, and assess whether the company is on a growth trajectory or facing headwinds. The real story is in the press release they are referencing, so that's where the deep dive truly begins. Alright? That's our quick decode of this Seritage Growth Properties filing. Remember, these reports are just the starting point. What do you think Seritage's financial results signal for the future? Let us know in the comments below. If you found this breakdown helpful, please hit that like button. It really does help the channel, and subscribe for more regular dives into the world of corporate finance. Also, make sure to join our Discord community. The link is in the description for more in-depth discussions and direct engagement. Thanks for watching, and we'll see you in the next video.